Today is Monday, September 23rd, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Today's guests are Alan Bush, ADM Investor Services Senior Financial Economist, and Mike Niemiec, ADMIS Grain Analyst. Mike, let's start with the grain markets this morning and the most recent Commitment of Traders report. What did that report look like?
Okay, I like looking at that report because the managed money is the money flow, and we're coming to the end of the month and end of the quarter. So we want to see where they're at and what they potentially could be doing with money flow. We currently have them adding to their net short positions in the corn and soy meal, while they're also lightening up their positions in soft red winter wheat and in the soybeans. They're still net short the hard red winter wheat and the hard red spring wheat, but the big surprise I thought was them going in the soybean oil from a net short to a net long position. And I guess that maybe some of the managed money is now starting to look at these USDA reports that show that we're taking down soybean oil supplies. We've also been seeing our monthly crush numbers come on up, and we're also seeing our oil stocks go on down, so that's a little bit encouraging. We've been canceling registrations, and then and/or if they're selling the meal, maybe it's just a reflection on how bad meal is.
What's the market looking for this week? Are there any key things to look for?
Well, I think that there's three things that the trade is going to start to focus on as we wind down the month and go into October. Number one is going to be what's going on with our yield and our harvest progress for corn and soybeans. It's still in its infancy, and the trade is kind of surmising that the USDA is a little bit off with their numbers. So we're going to continue to keep a handle on that. The other thing that we're going to continue to monitor, which continues to flip almost every day, as we get into the month of October, the trade talks are still on with the Chinese and the U.S., so we'll find out on how that's going to develop. So there's another one that's going to take us into October. And then finally, we're going to go and see what's going to happen with the progression of the South American growing season. Both Brazil and Argentina right now are kind of dry, and there's a little bit of concern, both if not for weather, particularly in Argentina with their political structure right now, which once again, Brazil and Argentina were big suppliers of corn and beans versus U.S. demand. And so we'll kind of watch those three things going forward in here as market moving factors.
Mike, in your opinion, what are you specifically looking for in the grains? What do you think they'll do this week and over the next few weeks as we roll into harvest?
Well, I kind of was looking at a price range right now. Like I said, we're getting into October and get to come up with these other topics. But on the top end right now, I kind of look at the USDA past reports and this grain stocks report they were going to come out with a week from today on Monday, and we still say basically have enough supplies of corn, wheat, and soybeans. So that's the resistance right now. On the downside, we had somewhat of a key reversal week a couple of weeks ago, and those have been kind of maintaining themselves. So that range is roughly a 50-cent range between $8.50 and $9 November beans, roughly around $3.50 to $4 December corn, and in the neighborhood of $4.50 to $5 soft red winter wheat. So I kind of want to think that that's going to be the range until we get into October, when we start to look at actual yield, actual talks, and actual South American progress.
Thank you. Alan, let's look at the greenback. What is the outlook for the U.S. dollar and the euro currency?
Well, it appears that interest rate differentials are slightly favoring the U.S. dollar over the euro currency. And basically, it's because the Fed is going to become more accommodative, but the ECB is becoming even more accommodative. So there's a slight advantage to be long U.S. dollars. Both central banks are going to ease credit, but it's a matter of which central bank is likely to ease more. That would be the ECB, and that, of course, then favors the dollar index.
We've had another slight setback in the U.S.-China trade negotiations.
Right.
In light of this, what is the outlook for the U.S. stock index futures?
Well, they're a little bit lower today, in fact, just marginally lower, but they did come back to mixed. It still looks like it's the interest rate influence that will dominate, as it has over the last 10 years or so. I would not be surprised to see some new historical highs in all of the major indices before the end of the year. Once again, it's interest rates that dominate over all others.
Of course, we're pretty close to the highs as we speak.
We are. We're not that far from record highs now. And why not new highs with the interest rates still low and getting lower?
Finally, Alan, both the gold and silver markets are performing well this morning. Why, and do you expect to see further gains in these markets?
Well, I do expect to see further gains in both the gold and silver. Silver is up over 80 cents today. The gold is up almost $16. A lot of this was linked to some very weak economic numbers out of Germany. So you have to ask yourself the question, would you prefer owning some sovereign debt in the Eurozone and in Japan that pays a negative yield, or would you rather own gold and silver which pays no yield? So by comparison, a no yield investment is much more attractive than owning some of the sovereign debt in Europe and in Japan that has negative return. So this is a long-term trend that will support the gold and silver well through this year and well into next year.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.